Over to you, Ramesh. Thank you.
Good afternoon, everyone. Great to be back here again at the end of fiscal 24. We've just completed another outstanding year. You'll see that in the results across all our businesses. So let's start with the key messages. Strong performance yet again. Standalone PAT is up 48%. Consolidated PAT is up 25%. This is despite various challenges. You heard about the stresses in the farm sector that we've seen from an industry perspective. Tech Mahindra has had a year where there was a number of things done to clean up and set the business well on a future path, and therefore Tech Mahindra profit was down 52%. But we've stayed on our course, and we've delivered across the group, in fact more than delivered in terms of the numbers. And beyond the numbers, there were a number of actions on living our purpose, actions on sustainability, where we won many accolades, but more importantly, we've done some very meaningful work to really drive towards a more carbon-free world. The actions we've taken to get to net zero from a carbon standpoint, from a water standpoint, waste to landfill standpoint, this is everything we're doing around being planet positive. Here I want to highlight that we've achieved EP 100 for our auto and farm businesses. EP stands for energy productivity, and what EP 100 means is that we need today literally less than half the amount of energy required to produce a similar number of automobiles and a similar number of tractors as we did at a baseline in 2009. Literally half the amount of energy. So when we talk about renewable energy and a cleaner world, this is in many ways even better. You don't need renewable energy. You don't need half the energy. And that, in fact, is a significant saving. So this is one that has been recognized by many forums around the world, and just a tremendous amount of effort that's gone into it over the last 15 years to be able to get to this point. And may I also add, this is 6 years ahead of target. We are targeted to be EP 100 by 2030. We are 6 years ahead of this target. There's a lot of work on women empowerment. And just recently, you may have seen the news around the drone Sakhi program, which is a Prime Minister's initiative that we are supporting, and with the Ministry of Skills and Education and with the Rural Development as well as Agri Ministries, we've created a program to train women to operate drones in the farm sector to help with agriculture and to help with their livelihood. And that's one of the many efforts we're doing on the women empowerment front. There's also meaningful progress on what we call being future ready. This is around talent, a very strong leadership pipeline, and we've enhanced that by a series of rotation programs that we've commenced across the group. You've heard about some of that in the past, around the leadership programs we have at entry level, mid-level, senior level, and these are some of the best programs across companies in the world today in terms of how we operate them in partnership with some of the top universities in the world. And technology, we've been an early adopter, a leader across many areas. We talked about metaverse earlier. In Gen AI today, we've got a very large number of applications across different businesses, and these are applications that are making a real difference to productivity in the businesses, to customer experience in those businesses as well. So as we look at financial performance, standalone, as I said, we're up 48% to 10,718 crores. We do exclude the impairment in this calculation that we took for trucks and buses last year. If we don't exclude it, we'd have been up 64%. But that was a one-off, and therefore that has been excluded. Similarly, on the consolidated results, we've excluded 3 one-offs from last year. The gains on Susten, when Ontario Teachers came in to invest. The gains on Swaraj, where we actually acquired shares and the company was revalued. And the trucks and buses impairment. So excluding these 3 one-offs, we were up 25% from a profit standpoint on consolidated. What are the drivers? First is our auto and farm businesses up 54%. And that's huge for large businesses to be able to deliver this kind of a growth year over year. Yes, offset by Tech Mahindra, as I spoke earlier, down 52%. And Mahindra Finance, while it's down 11%, this is after a number of write-backs that were taken in the prior year when GS3 had gone down very significantly. So if we look at the business overall, it is actually doing really well. It has hit 1 lakh crore in terms of the milestone for assets under management. It has grown assets under management by 24%. And most importantly, GS3 is down to 3.4%. We talked about getting below 4. It's at 3.4 right now. And the numbers that were also talked about in terms of credit losses for this quarter and this year have been met. So across all aspects, it's been doing well. There have been some issues around the fraud, and it was essentially collusion of 20 plus people. 11 have been arrested. Some of the dealers who were part of the collusion have returned some money as well. And we've now put in stronger practices that can help prevent such large-scale collusion as well. But we've also tested all the loans across the business to see if there was a potential fraud anywhere else. This is a test we had to do, and therefore we had pushed back the board meeting by a few days, and that came out actually very strong that there was no other collusion anywhere else, and that puts the business on a much stronger footing now as it goes forward. We talked about growth gems and the 5X challenge. They're up 6%. There are some pluses and minuses across those. But on balance, we've seen very strong performance across most of our growth gems, and that's what's reflected in some of the numbers here. So let's go through each of these in a little more detail. Auto remains the number one SUV player. Revenues up 36%. LCV share gains are significant as well, up 350 basis points to 49% plus, and a strong margin performance. What you see is profit after tax for this business has gone up to 4,714 crores, which is 2.5 times what we had last year. Farm has been resilient despite the industry decline. We've gained share, had a very successful launch of Oja. It is an exciting new product that will compete very well in India, in the US, in Southeast Asia, and sets us up very well for future growth across the world in farm, not just in India. Strong cash generation here as well, and here again a strong profit after tax at 3573 crores, up 2%, but the main word here is that it is up in an industry that has declined, and where one might expect profits to go down with lower volumes, but we've been able to manage the margins, been able to keep consistent on that, and Rajesh will talk more about what we've done there. But both businesses have stayed very strong. Mahindra Finance I talked about, we've crossed the 1 lakh crore milestone. GS3 is low. Yes, it's a tougher interest rate environment, but despite that, the business has performed very well, delivering a profit after tax of 1,760 crores, and this is after the 136 crore provision that we had to take for the fraud that I talked about earlier. Tech Mahindra has initiated its turnaround. It will be a 2 to 3 year journey. So we want to make sure that we don't set expectations of an immediate outcome. It will take that time. The demand cycle continues to be muted, but the operational rigor we have right now is very strong, and that's what will help us get back to a much stronger path and back to the goals that we've set for ourselves that you've heard in the Tech Mahindra presentation that Mohit Joshi had done a couple of weeks ago. As you look at our listed growth gems, logistics has had some challenges in the integration of Rivigo. That is behind us now. Things are moving very well on that front. That did impact some of the results for last year, as was seen in the logistics presentation, again, 2 or 3 weeks ago. Revenues up 7%, EBITDA margins up. Hospitality continues to do very well, and a business that has a lot more potential. So we will look for more significant growth from hospitality. And real estate has had strong momentum. The industry is doing well. We've launched 8 new residential projects, and the response to that has been just outstanding. So pre-sales for residential up 28%. more importantly, we've acquired 4x the amount of land from a GDV standpoint, and that sets up the business well for future growth. So as you can see, therefore, our businesses are doing well across the board, and that's what's really driving our cash flow. And this is something that we feel very good about. We started with an opening balance of 15,238 crores of cash. What you see here is where that's coming from, where that has been used. The key numbers I will highlight is that operating cash was close to 15,000 crores in this business. CapEx of 5,000. In addition to that, electric vehicles 3,000. We've paid back 3,500 crores of debt and a dividend of 2,000 crores. And even after that payment, we closed the year with 17,600 crores of cash. So obviously a very, very strong balance sheet. Very low on debt at this point in time. It's just a remaining small amount of debt that cannot be prepaid right now. That's on the books. But overall, an extremely healthy balance sheet, and one that really sets us up well for the continued growth plan that we've laid out. So as we look at the 3-year projections that we had shared in the past and outlined where we've ended up versus the 3-year projections, we actually ended up better than what we had talked about earlier. So operating cash over the 3-year period was 37,000 crores. Deployment was 17,000. And therefore, from a net cash generation standpoint, we generated close to 20,000 crores of cash in the last 3 years. One thing I'd like to highlight here is that if you look at services have generated 7,000 crores of cash in the last 3 years. This is more than auto, this is more than farm. So what you're seeing is a number of businesses across the group starting to perform at a much higher level and being able to generate that kind of growth that again sets up the group very well for our future plans that we've outlined. For the next 3 years, we will look at deploying 37,000 crores of cash. And a large part of that is going to be in auto. The deployment in auto has gone up significantly from what you've seen for the previous 3-year cycle. And I'd like to highlight that we are not going to ignore ICE, because ICE continues to be an important part of the portfolio, will continue to be important for consumers over the next 5 to 7 years, and therefore deployment in ICE is 14,000 crores. This will be new models, this will be refreshes, and ensure that we've got the best SUV portfolio out there by far. EV will get 12,000 crores, and all of this is something that will be generated by the auto business. So it will be self-funding. And which is the reason why we've talked to our potential investors, not potential, actual investors, BII and Temasek. Temasek will complete its investment that has been planned and put in the additional 900 crores. With BII, we've mutually agreed that let's hold off on that right now. Let's give it 6 more months, see if the business needs more funds, because BII has already invested 1,200 crores. So we'll have BII and Temasek both at 1,200, and then over the next 6 months, we'll assess whether we need to get more funds from BII, and we'll mutually decide whether that's required or not. But this is essentially driven by the fact that the auto business is going to be self-generating from a cash standpoint, and we will not need funds from outside after that. The farm business will use about 5,000 crores of capex, will continue to be a cash generator for us, and that's something, as you've seen in the past 3 years, we expect to be significant going forward. And similarly in services, we will use at this point 5,000 crores, which is for Mahindra Finance and for Growth Gems. Mahindra Finance is growing very well. As it continues to grow its asset book, it will require more capital, and that's where we will look at it. But besides that, many of our Growth Gems are delivering very strong results, and that's part of what we will continue to invest in to drive their growth. Here again, we expect to generate a lot more cash than what we've shown here, and that's part of what will fuel potential future growth for us or potential give back to our investors. So in summary, I'd like to say that we have consistently delivered on the commitment we made. We talked about a commitment of 18% ROE. We hit that in F23. We maintained that in F24. We talked about a 15 to 20% annual EPS growth. We've actually delivered 84% annual EPS growth over the last 4 years. 84%. And this is again driven by the hard work of all our associates as well as across our businesses. All of them are contributing to really get the Mahindra Group firing on all cylinders. With that, I'd like to invite Rajesh for a more detailed look at the auto and farm business. Thank you.
Hi, greetings everyone. Good afternoon, good morning to those who may be dialing in from one part of the world. Let me just build on what Anish said and talk about the automotive business to begin with. So on the left you see the Q4 volumes, they were up 14%, and the SUV revenue market share continued to go up now at a level of 20.4%. For the full year you see volumes were up 18%, and again we gained 130 basis points on the this shows you the volume curve over the last 4 years, F20 to F24. Clearly, we were at a level of just about 15 to 18,000 a month. We are now at a level of over 40,000 per month, which reflects in the 460,000 number that you see there. And you can see the market share trajectory on the right side of the graph. This is where we are on the booking pipeline. We are at 220,000. This, of course, we have taken right now just the 50,000. So everything else is as on the 1st of May, except XUV3XO, which we opened bookings for yesterday. And we've just taken the 1 hour booking number right now. We will not update that on an hourly basis. So if any of you are looking for what's the number today, you're not getting it. This is the number that we put out in the first hour, and we will update appropriately. Clearly the focus in this segment, and I'll talk a little more about that, is that there's a huge opportunity for growth for us in this segment. This is a segment where, as we've shared earlier, the SUV category last year was about 25 lakhs numbers. Depending on how we define the relevant size of the market, it could be between 6 lakh and 9 lakh vehicles per year, depending on who we count or don't count in that. If it's 6 lakh vehicles per month, per year, then we are number 5 player there right now. If it is 9 lakhs, then we are number 6 player in that segment. And we see a big opportunity to become number 1 or number 2 in this segment over the next 3 years. The reason we believe we can do that is we really think we have a very strong value proposition. We have a standout design, and a few days back, these were my words. Now we have a lot of collective feedback out of people, many customers walking into our showrooms, even on weekdays. Weekends are full, and this is playing out in the way customers are looking at our product. They are seeing and experiencing all of these values in our offering right now, which is what really gives us confidence that we have a very strong right to win. And in a way, this booking number is a reflection of that strong right to win and gives us a lot of confidence. Of course, the key thing here is to get vehicles out. As we put out yesterday in the press release, we've already produced over 10,000 vehicles. We have a capacity of 9,000 per month, and we will start deliveries of this on 26th. So we should see a good quantity getting into the market pretty soon. I'm going to show you an AV of kind of, you may call it a television commercial of the XUV3XO. Of course, you've seen lots of videos, but here's one more. Yeah, so that's in a way the new commercial with not all the features being called out, but kind of all of them being seen. So I'll move on from the 3XO to LCVs. We've had a very good run on the LCV segment as well. As you can see from the graph on the right, we've gained a lot of market share. The industry actually had a negative growth, but we've had some growth because we've gained market share of 3.5% points during the year. Last mile mobility, again, we've seen very strong growth. We crossed as a business 100,000 numbers during the course of the year. Electric three-wheelers have grown 4 times in 2 years, and we've ended the year at a market share of 58.7%. There's still a huge opportunity because the L5 segment, as you see here, is amongst the fastest penetrated segment, but even that segment is right now at 11.3% penetration for the year that's just gone by. So there is still a very big upside by way of volume growth. We would expect in this segment that there is going to be competitive intensity coming in. We think that's really good because that's going to grow the category faster. We need the 11% penetration to move up significantly. In the process of that, when newcomers come in, there may be some share loss, but that's something that we think is really what's important right now is to grow the category, grow our volumes multifold, and there is clearly a big opportunity to enable that to happen. We've recently launched the Trio metal body, which has got a very, very good feedback. This is what the auto consolidated numbers look like. The PBIT for the quarter was up 238% from 550 crores last year Q4 to 1862 crores now, and for the full year it was up 108%. The auto margins have gone up quite significantly over the last cycle. From this is just the Q3, Q4, and then Q4 comparison. We've taken the Q3 F22 number because that's where we had kind of set out a target, and this gives you a comparison of how we've gained margins from the time that we had said that we would increase our margins by, I think, 3 to 5 points, which is more than been exceeded. I'm giving you a quick update on a slide we'd put out some time back, which is what are our commitments for 2025, and an update on each of them. I'll run through this very quickly. The revenue growth was one of the key commitments we had. We've had a 3-year CAGR of 43% at the end of F24. We've already spoken about the market shares in both the segments. We have a very exciting portfolio of born electric vehicles coming, which will start in Q1 of calendar 2025. Very good progress that we're making in new international markets, with new products in our international markets, South Africa and Australia, and very good performance on our brand scores as per the brand track that we do, and a strong ROC of 42% in the auto business. Just building more on what next in the auto business as we go forward. We're looking by the year 2030 to have 9 ICE SUVs. Out of the 9 ICE SUVs, 3 will be mid-cycle enhancements, and the others will be 6 new SUVs. So as Anish mentioned earlier, and I'll build on this, a very aggressive plan on ICE portfolio, over and above what we've been talking about as a born electric portfolio. So 9 ICE vehicles, 7 born electric vehicles, and 7 new LCVs by 2030. The 7 new LCVs have 2 electric versions as well. So a lot happening on the front of making ourselves future ready. As you've seen, we've demonstrated a track record of very credible performance and being able to get really good financial returns as well. We had said we'll talk about the capacities in this meeting, and here you have it. F20 we exited, this is only SUVs, exited at 19,000 per month. F23 we exited at 39,000 per month. At the moment we are at 49,000 per month. We would expect to end next year at 64,000. I'll break that up for you. And at the end of F26 we expect to end at 72,000. The 64 has a breakup below. That's the transition from 49 to 64. That is SUVs, 5,000 more, which will cover us for 5-door Thar, which will cover us for the 3XO/400, and 10,000 of the born electric capacity that will start kicking in by the exit of F25. The 72,000 will include another 8,000 of born electric capacity. Now, what I do want to add on this slide is this does not mean that we will not have more ICE capacity that is coming in. There will be more ICE capacity coming in, cash flow for which will happen in the cycle that I'm going to show you with numbers, but that will come in after F26 because we don't need more ICE capacity till we come to the end of F26. Anish spoke about the overall number. This is the breakup. 8,500 for SUV ICE, 4,000 for CVs, which will include our trucks and buses business, and electric commercial vehicles. A sustenance number of 1,500 crores. So that takes auto division, as one may call it, to 14,000 crores. 12,000 crores Anish already spoke about, which will go in the form of an investment into Mahindra Electric Automobile Limited, which is MEAL. So that's the 12,000 crores over the 3-year cycle. That takes us to 26,000 and 1,000 for investment in other subsidiaries. So this is basically the investment cycle over a 3-year period of 27,000 crores. Moving on to FES, it was a difficult quarter for the industry. We knew that because there was a festival shift of Navratra from March last year to April this year. So this was something which was not unanticipated. On the face of it, we have lost some market share, but that was because we decided we needed to correct some stock. We've already gained that back as we came into April with our tractor market share in April being at 46+%. For the full year, we've gained 40 basis points. We've had very successful launches on the tractor side, which has kept the market share momentum going. The critical one is in the 20 to 30 horsepower segment. We've gained 12+% market share with the launch of Oja and Target between Mahindra and Swaraj. This, of course, is for the time after these products are launched. That is September of last year till March of 2024. Farm machinery has seen a very good scale up. This is not as much as we wanted, but we have to see that this was a year where the overall agri businesses were all slow and in a slowdown mode, and we saw that impacting the industry. So really, we've driven growth by gaining market share in multiple segments, as you see below, in an industry which wasn't as buoyant as our numbers reflect. So on the farm consolidated side, you can see that in the quarter we dropped revenue by 22% and PBIT by 17% consolidated. But for the full year, we were at minus 3%. The farm standalone PBIT for the full year is at 16.2%. But if you look at core tractor business, we're already seeing an improvement, and we were at 17.7%. This is a graph we've often used in our quarterly meetings. It reflects the ability to deliver consistent margins even as we see industry down cycles. You can see that even though in quarter 4 the industry was down 19%, we actually were able to not only just hold on to our margin but even improve it, which in a way reflects our ability to handle volatile business situations. Quick update on the 2025 commitments. 3-year CAGR of 10.5%. Successful launches. We spoke about market share gain. That's for the overall brand. And achieved in farm machinery a 2-year CAGR of 34%. We spoke about the launches of Oja, which prepares us for international markets. And more than 50,000 tractors with telematic kits sold in, which is really a way in which we are pioneering technology for use by farmers, and a very healthy ROC of 47%. What is next? We see many positive indicators for the industry for tractors as we go into next year. The rainfall clearly is one of them. Farm output is expected to recover. Government focus on infra and agri and rural spending and agri credit availability. Also the festival shift which we just spoke about. So festival shift will enable volume industry growth in F25. Some watch outs out there, but overall we expect that the industry for F25 will grow around 5%. We will of course update this in July, but at the moment our outlook is 5% for the year. 5,000 crores Anish spoke about, 2,800 of that will be new products, 700 crores for capacity, and regulatory and sustenance at 1,500 crores. Part of that 1,500 crores we've called out as 600 crores for TREM 5 readiness. That, of course, will be used depending on what finally happens with the regulation. But an amount of 600 crores has been earmarked. In case the regulation needs us to be moving to TREM 5, we are, from a product readiness point of view, completely set for that. The timing of the spend, if it were to happen, will depend on the date of the regulation. So in summary, for the auto business, 76,000 crores revenue and a profit of over 6,000 crores for the year. Strong margin improvement over a 2-year period. Strong performance on market share both in SUVs and LCVs. Planning 23 product launches by 2030 and a 27,000 capex plus investment in subsidiaries over this 3-year cycle. On the farm side, 33,000 crores revenue, PBIT of over 4,300 crores in F24, 3.4% share gain for tractors, 32% growth in farm machinery revenue, and successful product launches with a 5,000 plus crore investment plan over the 3-year cycle. With that, Manoj, thank you. Doesn't seem to be working.
Yeah. So I think it's a very quick set of slides. I think we have covered this. So again, just to summarize the year, from a Q4 perspective, 12% growth and led by auto. I think a 20% growth there in terms of standalone. From a PAT perspective, it's 32% growth, and we spoke about the various reasons, clearly led by auto very, very strongly. If I look at consolidated, overall is 9% growth in the course of the year. Multiple companies doing well. Auto has done well. I think Anish spoke about Mahindra Finance. I think that's also shown a very good growth. So overall, I think if I look at most of the companies except TechM, where there was a decline, we are seeing growth patterns coming through. From a PAT perspective, it's a 4% growth. But if I look at the decline in TechM and actually adjust for that, that growth number comes to about 10 or 11%. So I think what is happening is the PAT growth in auto is actually kind of compensated or offset by the decline in TechM. From a full year perspective, 17% growth and a 48% growth, and Anish explained part of it, so I'm not going to go into the same explanation. If I look at consolidated, again 15% growth. It's led by auto. Mahindra Finance has grown well. Accelo has done well. Mahindra Logistics has done well, and Mahindra Holidays. Those are some of the top growth companies in the group. And from a PAT perspective, I think if I look at it, really 2,800 crores of absolute increase is because of the auto sector. Farm, despite the things we spoke about in terms of the slowdown, in terms of the weak demand cycle, we have been able to show a net increase of 86 crores in profits. TechM is the one which is down 709 crores compared to where it was last year. And if I look at all the other companies, it's a positive contribution of 62 crores. So in summary, I think a strong year. And I think with some of the plans we are outlined for CapEx, I think we are looking at continuing and building on that base of growth. So with that, I'll throw it open for questions. Thank you.
Okay, we will now begin with our Q&A session. May I request those present here to please introduce yourself and the media house you represent, followed by a question. And then after that, I'll keep on switching between online and those who are present here. All right, so if you can raise your hand and start. Yeah, Tushar from LTD.
Good afternoon, gentlemen.
If possible.
Yeah.
Sorry, Tushar.
Good afternoon, gentlemen. Congratulations on the numbers. First, a couple of questions to Mr. Manoj Bhatt. If I'm not mistaken, there was a tax write-back during this quarter. If you can maybe elaborate on that. And there was an extraordinary expense also in the previous quarter. Secondly, if you can also talk about how much is Mahindra & Mahindra now earning on each vehicle sold. To Mr. Anish Shah, while the numbers are really good on every front, just wanted to know how much we expect the 3XO to add to your top line or to your bottom line or your top line contribution towards in the year ahead. I mean, you must have set a target in that sense. Mr. Jejulikar, good afternoon. What is the exports looking like at this point of time, both from the sense of SUVs as well as tractors? Any targets that you have? Thank you.
So your first question was, I think one of your questions was margins by vehicle. So I think we have never spoken about that, and that's something which is what we have mentioned in the past is typically our newer launches are at lower margins, and as the vehicles go into the second and third year, I think because of value engineering and other things, margins will go up. So that's been one of the clear trends across the years. And that's something we'll expect to continue going forward also. But we have never spoken about individual margins. And there was no tax write back, but I can double check and come back to you. There was some other question.
An extraordinary expense in the previous quarter.
Extraordinary expense in the previous quarter. The only thing we had called out was something around the World Cup, which we spent. I think that because we had done the sponsorship in Q3. I don't think there was anything else we called out as extraordinary last time. Yeah, thank you.
So Tushar, on the XUV 3XO,
How much do you expect it to contribute to your bottom line, top line?
we have planned at this point for a capacity of 9,000 vehicles per month, and we have talked about the fact that we can increase it in short order to 10,500 as well. The response has been phenomenal. We've talked about the fact that we got 50,000 bookings in the first hour, and as Rajesh said, nothing more today in terms of numbers, but over time we shall come back on that. So we do expect to be operating at full capacity for the year, and if you take that into account, then we would effectively double the sales of the XUV 3XO from last year to F25, and that will have, because you can do the calculations, a significant impact on growth in the auto business. Rajesh had mentioned that we would look at a mid-teens to a high-teens growth number for our automobiles, for SUVs in the current year, and that's something that we stay with. It may go up if we continue to see much greater demand, but at this point in time, we're comfortable staying with that estimate as well. Yes, definitely. And as we said, we stay with the mid-teens to high-teens estimate that we had given last quarter, and that's something we feel comfortable with right now.
Yeah, on the exports question, on the tractor side, we already seeing the numbers go up by way of growth percentage, primarily out of OJA exports. So we've just launched in North America, and that's going into retail at the moment. Initial feedback, including reviews of experts, has been very positive from our dealer community as well. The two other growth areas for our tractor farm machinery business are ASEAN, where we've just started very initial seeding and opened a equivalent of a regional office there. So that's in Thailand. So that's one growth avenue for the future. The second is sometime in calendar 25, we would want to look at Europe again with OJA, so that we're preparing for that. So we're very positive about the overall exports of tractors from India. On the SUV front, I did talk about how we're doing in South Africa, Australia, New Zealand, some of these countries. So there is a good positive momentum there. There is a slowness in neighboring countries for multiple economic reasons in those countries, availability of finance, sometimes LC, so on and so forth. So some of our neighboring countries, which are important auto export markets, have been slow for a period of time. Thank you.
Yeah, Shishti. Sorry, I think.
Hi,
Yeah,
this
Mr.
is
Roisake. Yeah,
yeah,
yeah.
thank you. This is Ryosuke Hanada from Nikkei, the Japanese news agency. And I have two questions. The first one is related to the electric vehicles. So what do you think of the competitive advantage of the Mahindra regarding the development of the EV, four-wheelers, DVs? So I'm asking this because this year Maruti Suzuki is said to be launch its first product in India this financial year. And what do you think? And currently it is Tata Motors which have a dominant position in the four-wheelers of the EV market. So first I would like to ask about what is the strengths of the Mahindra regarding the EV business. And secondly, I would like to ask about the impact of the general elections. So I remember that the dealers organization pointed out that because of the certain amount of the uncertainty of the election situation, there are some slight negative impact on the market. So as Mahindra side, do you also feel the same negative impact on the consumer sentiment by the general elections?
So I'll start with a overview on the first answer, and then Rajesh will give a lot more detail. As we look at consumers buying SUVs, they're not just buying electric, they're buying a whole host of other things when they buy a car. It's a design, it's the features, the technology, the reliability, the service network, electric as a powertrain, and we've shown across multiple models that we've got designs, technology, the features in the car that are outstanding, the service network that is unparalleled, and that's what's really created the demand that consumers have. On electric, we've got a Born Electric platform that, based on various tests, we think is one of the best, and that's something will be tested as we launch it in the December-January timeframe. And we have multiple vehicles coming out as electric. So we do feel very good that we can take the premium spot in SUVs with electric as well. But I'll hand it to Rajesh for more details on that answer.
Hi. So let me just build a little on what Anish said. We have been working on our Born Electric platform. We branded it InGlow, and we now have at an advanced stage of validation and start of production. As Anish said, we would want to launch these in the Q1 of the next calendar, which is between Jan and March. It will be a portfolio launch. And what we really are differentiating ourselves on, and I think that will be to your specific question on why we think we can win, will be around design. I believe we have a very strong brand DNA around products which stand out, which are adventure ready, which are fun to drive. So we are very different brand than some of our competitors, and we will play to those brand strengths even with the electric portfolio. So really tech, design, these will be our 2 points of differentiation. And as Anish said, we do have all the other things like the service networks, service capability, so on. So we believe that the electric portfolio on the passenger vehicle SUV side is at a very nascent stage, as you rightly pointed out. It's just 2% or lesser penetration right now. So leadership in a category which is not evolved is not so relevant in our view. It's really going to be about pioneering growth with very exciting products, and that's what we're set to do.
On election.
Oh, sorry, your second question was on election. So we've analyzed this over several previous elections by way of what happens. It typically affects a few days of buying. It's not due to negative sentiment. It's really because in rural India people are too busy being part of electioneering to have the time to go out and buy anything. It's really that is the cause of the disruption. It's not around negative sentiment. And typically, that demand comes back once you get out of the election cycle. This time, it's all will be over by early June, and June is a very good buying cycle going into middle of July for the tractor business as well. So hopefully we will see that even out. In the month of May, there is going to be disruption. So it's not about sentiment, it's about disruption, because people are busy being part of elections in their areas, and that normally evens out over the next few months. It's rarely ever a loss of business. There are months when you will have a disruption while the election is on.
All right. Thank you so much, sir.
Yeah. We'll take Shrishti and then Amit. Yeah. Here.
Hi, good afternoon, gentlemen, and congratulations on a good set of numbers. I have two questions. Firstly, on the farm equipment segment, we didn't get to see the positive commentary that this year you are expecting a robust recovery. But any range, because since you are a leader and we always look forward to your commentary, so any growth range that the company has in terms of the projections? And also, onto the raw material cost side, we know that there were lower tractor sales, but on a YY basis, your raw material cost is down from 74 to 72%. So any specific reason or anything more that we would like to know about? Thank you.
So on the industry, Shrishti, I did say in the presentation, we're expecting 5% growth as of now. We will review that in July as we see the monsoon build up happening. Typically, the estimates fine-tune between July and September as that comes in. On the material cost, I think your question is what's the absolute per unit material cost comparison? What periods were you comparing?
On a YY basis, but for Q4 numbers.
Only for Q4. Yeah. So typically material cost is a function of many things. Of course, commodity price is one of them. It's also a function of model mix. So it's very hard to just draw a conclusion looking at two numbers, because sometimes you're selling high horsepower tractors, then you will have a higher weightage of material cost, because this is an average of all the models. But material commodity prices were benign in Q4, especially for tractors which doesn't have specific base metals like aluminium and copper, which had gone up. The rubber has seen some kind of spike, but that's not affected Q4. We may see some effect of that now in Q1 or Q2. Rubber is a key commodity impacting tractors, because the size of the tire, as you know, in tractors consumes a lot of rubber.
Okay. Thank you so much.
Amit, then yeah.
Srijulika, congratulations on the results. You mentioned on the electric three-wheeler side that entry of new players would have some kind of impact on the revenue market share. So the EMPS scheme which has come has also halved the incentives for electric three-wheelers. So that's A, and B. Another question was on the PLI in auto. So do you see those kind of incentives coming through in the current year? And thirdly was on the XUV 400. So broadly, three-wheelers, what do you see? What's your outlook? And for the XUV 400, what is your perspective on the same?
Yeah. So on three-wheelers, I think you said revenue market share. So there it's volume market share, not revenue market share. Even LCVs, we talk about volume market share. Only in the SUV portfolio, what you see on the chart is a revenue market share. Everywhere else, it's a volume market share. And then you had some sub-questions around what happens to the different types of incentive schemes. I'll try and answer that question generically first by way of saying that even at the slightly enhanced prices that we've taken, we've studied that very carefully, seen the impact that it would have on a per month EMI that a customer would pay. So the way we've calibrated our pricing decision is really to say how much more will a customer pay per month of EMI, and what is the payback by way of the saving that they're getting by use of electric. And that payback is very few months. So we don't see that minor increase in price or EMI that we have taken affecting demand at all. We've made that correction and demand continues to be robust. So really we're not worried about that. The PLI scheme is on track and disbursements will start pretty soon. The SOP is about to get released, but we have all the PLI certificates and approvals. So we're good with that. Anything else on the electric three-wheeler before I answer the 400?
I mean, the market has been facing some stress right now. and other players are also going through a lot of stress in terms of being able to convince the customers why they need to pay more EMI for the same model where there's no much of change. So, do you see that kind of challenge at the retail level for you, or?
No, we don't see that as a challenge. That's why I said that, you know, the price increase we have taken is very carefully moderated to see what the customer will have to pay more per month and what is the payback for that extra more per month, and that's I think 4 or 5 months. That's about it. So it's not affecting demand from our standpoint.
Any percentile increase that you'd like to share, sir?
Sorry?
Price increase in terms of percentile that
Percentage price increase, I think we took 7,000, 15,000 totally is the total price increase we have to take with the change in the subsidy policy.
Ketan?
From the FAME 2
Sorry.
to the new system.
Yeah.
There was a question on 400, sorry.
Sorry.
Yeah, so for, 400, we are in the region of selling 700 to 1,000 a month. We have upgraded the product. We are getting a better response to that. That segment of the passenger car EV is hasn't seen the growth that we were expecting. Roughly, if you look at market share, we are about 25-30% of that segment share, and we do have plans with new products. But I think really the category-defining moment is going to come with the Born Electric portfolio. So that's something you've seen, and we are very excited about. So we think that will really help us pioneer a completely new revolution in electric vehicles. Thanks.
Yeah, we'll take quick Ketans and then we will go online. We don't have too much time today.
Thank you for taking my question. Just a word on the current demand environment. What's your assessment? You got a fantastic response to 3XO. The flattening out and the high base is now having an impact. Are you seeing any impact on the 10 to 20 lakh category as well in the broader market sense? That is with regards to current financial year. And a little bit long term, a lot of debate and talk about slowing down in the electrification space and bringing in the hybrids there. You had projected for a certain percentage of EVs by the end of the decade. I mean, a lot of review is happening across companies and across sectors in terms of the investment that is going to go in. So just a long-term vision, you think that the Indian electric vehicle market will move to, and what will be Mahindra's presence?
Okay, so on the F25 demand question, Ketan, we stay with what we had said earlier, which is we expect us to grow mid to high teens. That will be higher than the industry growth. We say that based on the portfolio, and the new launches, one of which has just happened, the other will happen over the next few months. We expect that to get a very good response too. And we really think that that is what will take us to the mid to high teens growth. So, in this category, we've seen that you need to have the right amount of excitement and products, and when that happens, then growth does come, and that we have that in store for us in F25. Anish wants to.
Yeah, on the long-term part, Ketan, we don't see any change in our projections. The reason being that India is still at 1.5 to 2% penetration in EV. And we really haven't seen the Born Electric momentum in India pick up. That's something that once that comes in, you're really going to see that redefine the whole EV play. We will have people who can charge at home to be the early buyers. The network or the charging ecosystem will start coming up after that. That will give an inflection point at some point. So going from 1.5 to 2% to 20% is not going to be too much of an issue. As we hit the 15 to 20% mark from an overall EV standpoint, the question will be how have the charging ecosystem been developed? And that's going to help then take it further from there, which is what you're seeing in some markets around the world. But some have even conquered that and gone beyond that. Norway, for example, is at 90-95% EV today. So there is clearly a path to that. And more important is that can we really deliver a car that's exciting for the consumer? And if we can do that, then a lot more consumers will want an EV. And as that demand comes in, the charging ecosystem will come in with that.
Just a word on the market trend per se, Rajesh. If how are you seeing the demand traction in the higher price bracket now? Base is also catching up. Are you seeing any softening from your perspective? You have strong products, but how are you seeing the broad market breadth in terms of traction, demand? Because the forecast from the industry also is about a low single digit. So are there any pressure areas that you are witnessing at this point in time?
Ketan, I'll give you the same answer that I gave 3 minutes back. We stay very optimistic about the SUV portfolio for the year for us. We remain confident that we'll grow at mid to high teens, and as Ani said, maybe as things go based on the 3XO response, which is better than what we thought it would be. Maybe there's an opportunity to revise that upwards too. But as of now, we stay with the mid to high teens, and we will do our best to get vehicles out and bring down the booking number, open booking number, and bring down the waiting period. I mean, that's really what we are set out here to do. We don't actually, would want to reach a stage where you don't have to show that chart anymore.
Yeah, I'm going now online, then we'll come back, Sohini. Time permits. Alicia from Mint asks, your capex on ICE continues to be larger than for EVs going into 2027. Could you point to what this will go towards and whether you were expecting ICE to keep requiring significant capex beyond 2027 as well?
Yeah. Hi, Alicia. Yeah, right now, as of now, as we've shared earlier, we are saying that EVs will be 20 to 30% of our SUV portfolio in the year 2027, which means that still 70% of our portfolio then will be ICE. It's a growing segment. The segment is growing at a healthy rate, and we would have grown at a healthy rate. And we make very good financial returns, as you've seen out of our numbers from the portfolio that we sell. So it makes sense for us to stay invested in a business where we are strong, our brands are strong, and we are getting very good financial returns. So we will continue to have a very aggressive ICE portfolio as we go in over the next many years.
Thank you.
Yeah, and then the second part of the question, from 27 onwards, I think a lot will depend on how quickly EV ramps up. So at that point, we will assess whether the ICE EV mix changes or not, based on what happens over the next 3 years.
Thank you. I'm combining two questions of Swaraj Bagaonkar from Financial Express. How is the company planning cell localization for EV batteries? M&M has in the recent past said that it does not intend to go into cell production. He also asks, there is a growing debate over hybrids, whether they deserve a tax break. What is M&M's stance on this, and is the company working on strong hybrids?
Hi, Swaraj. On the first question, I'll respond. Second one, Anish will add on. We have said in the past that we are actively looking at cell localization, and there are conversations that we are having with a company in that space, and that conversation continues. So it's very much on the table by way of a possibility. No final workout or conclusion has been done, but the possibility of doing cell localization in India is under very active consideration. Anish, you want to take the hybrid?
Yeah, and on hybrids, I know there's been a lot of debate on this, but government incentives typically are to enable an industry to transition to a place that is better for the economy. Now, electric vehicles have no emissions. You've got a much lower fuel import bill because they don't use fuel. And in that context, the government's providing incentives, governments around the world, in fact, are providing incentives on EV to help enable that transition. And over time, that incentive will come down because at some point, we're not going to need that anymore. On hybrids, there really is no material change in emissions. And various auto industry experts or auto journalists have talked about that as well. Yes, there is some benefit from a fuel efficiency standpoint, but that's still very marginal. And it is more expensive to build because you've got two powertrains in the car. And which is also the reason why governments around the world largely have stopped providing any incentives for hybrids for the last 20 years. So the question is, is an incentive really required? Now, from a consumer demand standpoint, if that becomes a bigger factor, we will be ready for that. So we view hybrid as an extension of ICE. It's a separate, slightly different powertrain. And to the extent that that's required, we'll be ready for that. If there are significant changes in hybrid technology that cause it to be much more like an EV, then that's something we will move into much faster. So at this point in time, we feel good about the focus on EV. We are ready for hybrids. We are looking at hybrid technologies closely, and we will continue to adapt as it moves on.
I'll take one more online, and then we can come to Benny and Sohini. So Raj from PTI asks, with the proposed investment of 12,000 crores in MEAL, what will be total investments by M&M in the EV arm? Where would these fresh investments, along with those of BII and Temasek, be deployed?
So BII has invested 1,200 crores already. Temasek has invested 300 crores and will invest an additional 900 crores. So that will be an additional 1,200 crores. This is factored into M&M's investment of 12,000 crores. So that is over and above all of these investments that have come in. There's an additional investment that had been planned from BII for 725 crores. And that is one, given that we have all the funds we need, we have been discussing with them saying, is this required? Over the next 7 months or so, we will mutually decide whether that is required, and we will again mutually decide whether to put that in or not. It's a small amount, we'll assess at that point in time.
Benny?
Hi, this is Ben from the New Indian Express. Going by your investment capex plan for ICE and EV, is it a bit confusing? Where the focus is?
The focus has
Aren't
to
you
be,
sure about the growth? Okay, let me just ask the basic question. What is your market share in the EV segment today?
so the focus has to be on both, because ICE continues to be an important play, and therefore we will continue to invest in ICE. In EV, we feel that we can actually go out and get a dominant position in EV. We have the products, we feel that we've got the technology to do that, and as we launch these products, you'll see that as well, that why we feel so good about the fact that we can actually become a very significant player in that space. So that's what's causing us to invest in both right now, and we've got 6 born electric products coming up next year, and with those 6 products coming up, we feel very good about what we can do in the EV space.
No, you said that you will figure out whether you can create a market there in the EV space, right?
No,
that is, with the existing portfolio, you aren't sure to pick that portfolio.
No, we never said we will figure out.
No, that is what they said.
No, so let me just repeat what we have said consistently over the last 2.5, 3 years. 20 to 30% of our SUVs in the year 2027 will be electric.
Okay.
There is zero
And
ambiguity.
what is the current market share?
The wording of this hasn't changed in 3 years. It's exactly the same wording. The current market share we don't think is relevant because the market doesn't exist at all. The market is just
1.5%.
it's in the segment in which we play. It's about 30%.
Okay. Thank you.
Sohini?
Yeah, you are investing 12,000 in MEAL, and as you were mentioning that it will start generating cash for itself. So any in the next 2 to 3 years you expect MEAL to break even? That's one, and because all the cars are also lined up and there will be quite a few products on the road. And secondly, I also wanted to understand what's your take on the new EV policy, given you are investing actively in EV. I mean, the granular details of the policy are not out, but just to have your perspective on that.
I don't think we can share the projections of MEAL at this point of time, but what I would say is only is that of course it will get reported, and as we've said in previous meetings, when we do have that sale coming out of MEAL products, we will show electric portfolio separately than the ICE portfolio from an overall financial understanding for everybody. So that is something that we will do as we start selling products from there, and then you get a visibility of how that's playing out. On the EV policy, Anish, you want to say?
Yeah, I'll cover that. On the first one, I'll also add that the margin profile we expect to be similar to ICE.
On a
we
per
don't
unit,
expect
on a per unit basis.
On a per unit basis.
Not on a percentage basis.
Yeah, and
the denominator.
yes, and that's an important clarification, because EVs, as they have a lower GST, from a percentage basis that would be lower, but on a per unit basis we expect a similar profile. At the same time, we expect a similar path that we've seen in every new launch, which is initially the margins are lower and then they increase over time. So all of those things will play out exactly in the same way. Now, with regard to the EV policy, we feel that the policy is actually geared towards Make in India, which is what we've always been saying, that we should encourage all automakers to make in India. We welcome competition. We've gotten much better with competition. We thrive with competition. So we are very happy for competition to come to India. As we have more competitors in the EV space, the EV space is going to grow further as well. And therefore, to me, I'd highlight this, the most important element of the EV policy, which is encouraging everyone to make in India, which I think is excellent.
Yeah, Nilesh and then Shally, I think that will be the last.
Yeah, my question is, SUVs have gained so much traction in India right now, like if you see the shares of SUVs, even for Mahindra, which was one of the early entrants, it continues to grow. So what is the saturation point, or till when do you see the penetration of SUVs will continue? Does this mean the end of road for hatchbacks and sedans in India? Secondly, long back, I think 4-5 years back, Mahindra was one of the first tractor makers to showcase autonomous tech so what is the progress on that? And lastly, during your slide, you also mentioned that there will be focus on Mahindra Trucks and Bus division with new investment. Can you elaborate on what kind of investments are planned and what kind of roadmap do you have for MTB?
Okay, so 3 questions. I'll try and do them as quickly as possible. So on the first question, in the last quarter, SUV penetration was close to 60%. A few quarters back when, I had this conversation with someone and it was, I think, 53-54%, and I had said, I think it's at its peak. I don't think it's going up from here. I think what we have to understand is the way SIAM SUV definition is. It is not really SUV in the sense and the way it's used around the world. So it has a lot of cars crossover platforms. So, in a way, yes, what you're saying may happen. Because actually some of the SUVs that we count in what we call as SUV industry are really car crossover platforms and not really SUVs in that sense. So, which is good for us because in a way the customer is mentally thinking about moving to SUVs, and then when they think about moving to SUVs, they do think about our brand. So that's good for us. On the autonomous tractor question, we actually do have some level of automation. If you check out the Oja tractor, it is, I think you've had a chance to look at it, I don't remember, but it does have some very interesting features like, the way the implement or the rotavator will move at a point of turn, which is automated. These are, high effort things for the driver. As we researched the autonomous tractor that we had developed, and we actually sold a few of them, we found that many of the farmers actually don't want to give up their control over the tractor because they actually have a very high level of skill, which is not so easy to replicate in a fully driverless tractor. So we are moving to different levels of autonomy, but not thinking about a driverless, and Oja is a starting point. On the MTBD question, we've actually seen very good volume momentum, gained some market share. It gives us a lot of confidence. We have some dealers who are now in double digits. So we are following a focused market strategy, and there is a plan to invest in upgrading the portfolio. But some part of our portfolio is fairly new, like we have an ICV portfolio, which is just a couple of years old. So, some of our products are actually fairly new. So really, over and above the investment in product development, we are committed to leveraging what we have and gaining market share further than what we have already.
Thank you. Thanks. We are way past our time, but we'll definitely, Jaiveer, Abhishek online, we'll take your questions separately. We've not been able to answer them today, but definitely we will answer them online. We'll get back to you as soon as we can.
We have one person here. Let's take a final question because
all right.
we thank folks who come in person. So as you've been here in person, we'll take a final question.
Yeah, thanks for taking my question, Anish. I just wanted to understand that you have around 7 LCVs lined up by 2030, including 2 EVs. So I just wanted to get a sense of which are the subcategories which you will be trying to focus on over this period of time.
I'm not going to reveal specific details now, but some of these launches are just a few months away. They are in segments in which we don't right now have a strong presence, and this is all LCVs less than 3.5 tons primarily is the segment in which we are talking. We did upgrade our entire pickup portfolio a year back, so some of that is around that. We also have a global lifestyle pickup which we had showcased in Cape Town. I don't know if you had a chance to see that. There's some images of that. It looks really exciting. So you should take a look at that too. So, but more of that in the next few months. We will launch the first of one of these over the next few months. Thank you.
Thanks a lot. Thanks.
Thank you. Thank you, gentlemen.
Thank you.
And request you to kindly join us for some refreshments in the adjoining room. Thank you.